Hello, everyone. Happy Monday. How is everyone doing? Monday, October 7th. Let's see who's here real quick, then we'll get through the markets. Good morning, Sterling. Netflix downgraded to underweight from equal weight. Good morning, Mark. Thank you for tuning in. Good morning, Patrick. Crude still chugging on up. Yeah, the 210's dropping back down. We'll take a look at that. Volatility's up. Dollar, keeps on moving. Dollar yen does, and the dollar does. Yen weakening. What else? We got some downgrades. Good morning, McRangers. So, is there anything really important? What else? Good morning, Ted. I gotta get that's most important. Say good morning to people. Good morning, Jacob. I mean, the Eurozone, they were worried about also, besides what Sterling put in there, they were worried about undershooting inflation. Doesn't make you feel good? Oh, we're going to undershoot our inflation target. Well, yeah, good, please, thank you. By the way, this is absurd this week. I think we got 18 instances of Fed speak. We're at definitely peak Fed. We are at peak Fed. How many speeches do these clowns have to make? Really? 18 of them? Can we go back to I just want the silent period. Let's just do the Fed meetings. Because today we got some bill auctions. We got Bowman speaking, cash and carry speaking. We got the consumer credit change today. Then we got Bostix and Mucilex speaking. We got Kugler tomorrow. We got Bostic again. We got Collins. We got Jefferson. Jeez. Big thing on Wednesday is the FOMC minutes. And we got more Fed speak. But really gets interesting Thursday. We have CPI numbers and jobless claims. CPI and jobless claims on Thursday, and of course, you got to get in another Fed speak. And then Friday, rounding out the week with PPI and the preliminary numbers for October for consumer sentiment. And look at this, can't be wrapping up the Friday without a Bowman speaking. Oh boy. So things are backloaded this week. Really kicking off with the FOMC minutes, unless some of these Fed speakers say something really interesting. So far this morning with some downgrades, you got the mega caps pulling back. You got oil still strong. You got Pfizer in there, up nearly 3%. So if we look at the groups, the sectors, you got energy, and the only other thing that's positive is, well, financial is pretty neutral, but healthcare barely positive, and energy, everything else is negative going into the Monday. Fed Watch 2, I saw you put in something in there, Sterling, about markets only pricing in 50 basis point cuts, but this looks like we're back to double cut, single cut, unless I'm reading that wrong. Because right now we're at 5. Or is that single cut and single cut? I'm confused this morning. Oh, it's still a Monday. So, fear and greed, we're back to greed, extreme greed. Schiller PE, we're at 36.94. Dirt cheap markets. This week, we got Pepsi tomorrow. Not much on Wednesday. Domino's and Delta on Thursday, but really Friday. Banks kick off the next quarter earnings season. JP Morgan Chase, Wells Fargo, BlackRock, BNY. So Friday kicks off. Not only do we have the CPIs on Thursday, you got the PPI on Friday, along with the banks kicking off earnings season. So sort of quiet until then. What else? Good morning, Ted. Good morning, Jacob. Good morning, Anissa. Good morning, Royal Palms. Good morning. I didn't abandon the Bears. The Bears won yesterday. The Bears won. And the Cardinals, I did watch some of the Cardinals game, and wow, beating the 49ers. Pulling it out. So, I'll always be a Bears fan growing up in Chicago. It's tough to be a Bears fan, though. All right, I wanted to just point something out because we talked about that percent beat buy on Friday if it came back through. Now, we sold off. Interesting on Friday. Some wild price action. So we sold off, which is what I said that could be a possibility going to the open. Then I just want to recap something. Then we formed a double bottom, a really nice double bottom. Confirmed it here. So little pullback didn't invalidate it. Then we triggered it and we marched up to all the targets. And then it followed through with the percent B buy. So technically we still have a percent B buy. All right. Technically it has to go below the bars. It has to go below the October 24th low to completely invalidate it. That'd be the farthest. That invalidates it technically. Would I have a tighter stop than that? Yeah. Now, this came up to a 75% harmonic, and the rotation zone would be out of the way. So look at this. If we do trade below the lows from last Wednesday, 57.24, we've confirmed a double top. We closed below it. It's been triggered. Let's look at the targets. 56.82, 56.61, 56.40. Look where the 50 exponential is. So, yes, this would be going into the rotation zone on the weekly, which has been weakening, okay? And we are at weekly cycle tops. We're still at daily cycle bottoms. So this, we could see some more sideways to up, potentially for a couple days. But if we get to top and then trigger this little double, if it's still in play, we might start seeing a bigger sell-off and pullback. The Lions suck for, hey, the Lions actually, they might have a halfway decent team. They could make a playoff run this year, but they had sucked forever. I don't necessarily have a reward to risk on that one. It's very conditions. What I do is use harmonic targets from the on the way up. So bouncing up here, triggering and hitting the 75 is the first at least stop reduction target. Then hitting the 87.5 would be at least a partial profit target. So we only hit, from my perspective, a stop reduction target. And if you want an idea of how I would be reducing the stop, well, there you go. On a closing basis, it would be 57.55 on a 4-hour closing basis, by the way. And if it traded back below 57.45, it's a walk away. Means the trade's over for me. So that would already be a stop reduction from my perspective. And the first profit target would be 58.1675. Again, not giving trading recommendations. Just trying to teach you so you can figure out how that works in with your strategies and your methodologies and your time frames. Okay, and especially I'm not ignoring this area, this 80. I might, it's really about 85.15, 86.75, which roughly gives the same reward to risk for my initial setups, because you have major selling pressure up here. You see all these spikes above this level? Look at sold back down, spike up, close down on the day. Spiking up there, closing just below, could not sustain above that level. Then you had a spike up the next day and a major reversal bar. So on any rally up here, and remember, we could rally up here to 87.5, and that just makes it a stronger potential double. Now the targets would change because they are right-hand side targets, but that's what I'm watching for. Okay. It's trading against right now. If you see here, you have this emotional candle close back from Tuesday the 1st, which set up resistance. See, spike above, close below, spike above, close below. Coming in here, closing right at that level, then reversing, spiking up to that level. Spiking up and just closing above that level, and now it's testing support again. See how it spiked below and closed above, spiked below, closed way up. So this is a very key level. This is a very key level to watch, especially going into the open, this 57.60 area this morning. That is very key, for me at least. The NASDAQ, which did not manage to close above the 62.5. So that's what I'm going to be watching today. 2020.68, then 23.58, then 24.48 are the upside targets. And those other two targets don't kick in unless we at least get a 4-hour close above 20,268. Pullback levels. Pullback levels, we're trading roughly there. Now, this isn't as clean as the S&P, but it's decent right here. 20,058, 20,060 is the very key level. We tested it earlier today, 20,058 with the low from the European session so far. So that's what I'll be paying attention to there. We pull back from there. Then, let me just do this real quick. Then I would use your harmonics. Pay attention to, this 2042 level, and then very key is 19,986.50 on a 4-hour closing basis, if that does flip around and go lower. The Dow's just been in sort of a mess right now. So far, a sideways correction. The key, I'm just going to get big picture in the Dow. The big picture is if we close below last Thursday's lows, which would take us below the rotation zone. If that happens, then I need to change the color of this just so we're not getting mixed up. Then I'm looking, see, between the 50 and the 62.5, we have the 50 EMA. We saw a roll gap left behind. We have a 50 EMA. So that's what I'll be watching for if we close below the rotation zone and Thursday's lows. That's the bigger picture. If we break out, the key resistance is about 42,700. Above that is a quick trip back to 43, and then we have a cluster at 43.2. Russell, a channeling pullback so far. But this is, if we break above the earlier today's highs at about 2237.6, key target area for me is 2270. Pullback, my support area is 2218 and then 2198. Hello, Charles. Thank you for tuning in. The VIX elevated. The VIX elevated definitely today. So, I mean, we have a lot of unease in the world, especially the Middle East, and we have the anniversary of last year terror attacks against Israel. So we have markets sort of on edge, but I'll go into more potential sell-off mode or following through with the sell-off above 23. Very strong support is back at 19 for the VIX. The DAX, after stalling out, trying to rotate back up. No %B buy triggered, but the only thing that gets me bullish in the short term is a close back above 19,450 in the DAX, which could potentially take us a double top territory. The notes, look at this move on Friday and then more today. This is going to be very interesting. Pay attention if you watch the note futures where we closed today, because the low close was back in August. I'm going to be paying attention if we close below the low close from August 8th. Right now, we're getting major support turning into potential resistance. Yes, we can get bounce plays, but I'll be watching them for rollover plays and continuing climbing yields. Going to be also be watching to see if we get back to, after ticking off the 87.5 rule, you just wipe that out, and hitting the harmonic cluster and stalling out there. Look at this. We could easily get back to the area of the 200 between the 50 and the 62.5 and a prior major support level. So I'm going to be watching for rollover plays in the notes, and look at the yields. Topping 4% again on the 10-year. So these 10 and 2s, also the 2s, look at the 2s. The 2s climbing 3.9. So I'm going to still, going to be watching over the next little bit for us to possibly take out this 200 again. And on any pullback, key support is now coming in about 3.9 in yields on the 10-year, on the micro yield contract. With the rising first cross rotation zone. So, and this is saying something else is up in terms of potential inflation, because based off of things with what's going on in the world, people should be running more to the 10 years and yields should be going down, but no, yields are climbing. Yeah, way to go, Fed. You know what I think about the Fed. 10-2s coming back down based off the yield contracts, came back to 0.05. All right, so based off the futures contracts. But look at this. I mean, that's pretty substantial pullback there. Dollar index so far, we've had a pretty key level closing back above key resistance on Friday. And this is an area we can pull back, but I'm watching this to make sure on any pullback, 101.50 is very key with the rising rotation zone. So I'm going to be watching also for the dollar index to return to the area of the 200 and between the 50 and the 62.5 harmonic levels. Crude. First target hit, stop reduction hit, re-hit today, trading right there at that first target. So also first cross the rotation zone, right at key support. So any pullbacks in crude, I'll be watching for rotations back up. The bigger picture in crude, I'm going to be watching to see if it closes above 77.30. And then the targets would be 79.71 and 82, potentially. But this very key, look at that 200 area, right at that 62.5 harmonic. And that's where the third target, from my perspective, could be extended. Let's just see. Look at that. If we shift it now to the left-hand side, I just want to see where the aggressive targets are. Look at that. It takes it right to that 75% harmonic. So, gonna be still in the short term. The only way I'd extend the target would be if we manage to close above 77.30. Just trying to teach you the way I look at things, not, again, trading advice. I got to keep saying that because people oh, you said this would happen. You said this. No, that's what I'm watching for. If you're going to trade something, again, you should know your own setups. You should know your own reward to risk, and you should know your stops and your targets. Your stops and your targets, not what I'm watching for. Because I might do things intraday. Things can change, like patterns can trigger. You could make a double top on a shorter term basis. It triggers, and then I'll start watching for a bigger pullback. Yen. Little reversal here today so far, but look at this. We had the Mr. Yuck head and shoulders. Not yet at the first target of 150. But any pullback here, I'm going to be watching with the hooking up 50 and the rising rotation zone for the yen to keep weakening and for this to rotate back up, because things are shifting. We are at cycle tops, so we can easily get a pullback or a sideways movement for a bit and then another bout of weakening. The euro on Friday officially triggered the double. So any rallies, I'm going to be watching for rollover plays. And continuing euro weakness, especially if we bounce back to about 110. All right, we are oversold with cycles at the bottom. So would I be surprised to see a bounce in this? No, I would not. Oh, $2.99 at Costco. I think it was right around $3 here. Right around there. I saw at Walmart, when I was at Walmart yesterday, it was like $3.08. And Costco's generally just a little cheaper than Walmart. Spideys. So, bigger picture in the spiders. lopsided double. Lopsided double. We'll keep an eye on that. That's very similar to the S&P. If that does trigger, it would be out of the way of the rotation zone. Other than that, any rally today I'd be watching for on a fill would be to Friday. Open price of 572.35 and then the closing price. Do not ignore the open price from Friday. Okay? So, again, those numbers 572.35, then 572.98, then 573.53. Very key support area for me is right about 570 on any sell-off today. The Qs, we did not close above the 62.5 on Friday. 487.59. So that's going to be key. We're trading back down to 485.51. This is the example that I just used since the open and close are so close. I just used the closing price, 47.32 for any gap fill play. Then it would be 489.63 to the upside. Very key support coming in at 43.42. And on a rally, watch to see if we shift the probabilities once we close above 47.59. Bitcoin, there's not much to talk about still with this. It's still just in a huge consolidation pattern. Ethereum, not much to talk about there either. Nvidia, we have a little mini potential double top in Nvidia. Just as many. It's only reversing this move. So that does not mean it triggers a massive sell-off. But in the short term, this could trigger a pullback on an Nvidia close below 115.14. So that's the key thing I'll be watching for there. Even on a continued rally, it would not invalidate the double. Even above, with a peak slightly above Thursday to 26 high. Tesla, there's not really much to talk about here unless we start closing below this trend line. What else do we have? We had Amazon with the gap down, with the downgrade. Pay attention if we take out Thursday's lows for a quick trip to the 200, which could be an interesting short-term swing or day trade, depending on when that triggers, if it does trigger. Key for me on this, since it did tick off the 87.5 rule and stalled out there, that's these purple lines I'm talking about. So remember, it closed back above the 62.5. Magnet price was the 87.5. If we flip this around now, the very key level for potential breakdown, which might not happen anytime soon, but is 168. Apple, this is getting very, very sloppy. You have a little, still, it's almost a triple. This is a mess. You have this little thing in here. I'll still leave it on here in case we really break down, because if Apple starts trading below 223, could be a quick trip down there. But other than that, that pattern will probably be destroyed this week. All the commodities are nuts. You're welcome, Andrea. Thank you for tuning in. Have I noticed lithium? That's taken off. I haven't looked at that in a while. Thank you for pointing that out. Thank you for pointing that out. That is, wow. After getting obliterated, taken back off to the upside. Let's take a look at the key target area in the short term. Little weekly double bottom. Key target area for me would be 51.87, so just in front of 52. Short-term target area, at least for a continued stop raise, would be 47.41. Look how nicely the harmonics line up with prior support resistance. So that 37.5, support resistance area. The 50 resistance was a little short-term weekly support turning into resistance. And look at the 62.5 on the weekly basis. prior little support that's broken and turning into resistance. That's why I love these harmonics. Look at that. So on any pullback in this, I'd be looking at this 43 area for a key support. And that's exactly where the rising daily rotation zone is. Thank you for pointing that out, Richard. Thank you. I did not notice that. All right, let's peek into the S&P on the open. Actually back above a pretty key resistance area retested. So I'm going to be looking at about 57.76 going in the open. If we break back below there, I'm going back to that 57.70 to about 57.67 to look for key support. Resistance on a continued rally, 57.90 on a breakout above this little resistance shelf. 57.90 would be the first target area I'd be looking at. So let's see where the tick opened real quick. Weak opening, but not below 1,000. Weak opening, but not below 1,000. So if we do spike below 1,000 and can hold key support, I will watch for some kind of bounce. But right now, we're going to be watching again this key support area right in here to see on any market pullback. If that holds and then we get a start bouncing in the tick, that will be holding key support. If we don't bounce much in the tick and we break this out, then I'm watching for the breakdown play. All right. Thank you for tuning in. I will be back. Remember, Fed speaky throughout the day. So be on your toes for that. And other than that, I shall talk to everyone later. Bye for now. Sterling's glad some volatility has returned. Yes, you need the volatility. That makes those trades a lot better. Volatility is key. So with that, I'll talk to everyone later. Bye for now.